Hi and welcome to another episode of Monday Market Outlook. This is going to be an exciting week for the S&P 500 as 86% of the S&P 500 stocks are going to report their earnings next week. As we mentioned in our previous episode, earnings are going to be key to determine which direction the market is going to go. Last week, we had some blockbuster earnings from Tesla and Netflix. Tesla missed revenue, causing the stock to go down by as much as 10%. Netflix reported mixed earnings but could benefit from their password sharing crackdown to expand to more territories this year. Bank earnings also on the spotlight. Most of the bigger banks were able to beat estimates. Mixed earnings from the regional banks, but overall not as bad as expected. So locally, we have BDO reporting spectacular numbers. Net income up 40.5% to 16.5 billion. BPI likewise reporting spectacular numbers. Revenue up 52%. As part of our investment thesis this year, we are already expecting banks to perform very well given the expansion in their net interest margins, and we can see this thesis playing out already in the first quarter of the year. Now, if this continues, these banks may have a lot of cash and might be coming out with great dividends for 2023. Right? Now, let's look at the PSEI chart. The index ended very strong last Thursday, shortened trading week. It ended very strong. Again, trying to challenge the 65.50 level. As we mentioned, the market may move along the 0.5 and 0.38 fib. Actually, market is not exactly going anywhere except in those ranges. But good news here, we can see at least a small trend line happening here, moving to the upside. Hopefully this week we can continue to see good earnings numbers from some of the company reporting. We will have SM, we will have URC, we will have AP also reporting this week. Good numbers from these companies might give the index some catalyst to challenge the 65.50. However, we still have to be careful because if you look at the PH market breadth, only 43% of the index stocks are above their 50-day moving averages. And so far this year, the Philippine index has performed poorly compared to other markets. We are down by 1.3%. If we look at the sectoral performance, only the financial and the mining sectors are up, and most other sectors are down, especially property sectors. And of course, the best performing mining stocks would be Apex Mining. It's already at 255. You may want to consider buying at 250. It almost hit that level, right? So this is a good level for you to buy back because fundamentally Apex is very, very undervalued. We've adjusted our price target to 3 pesos. So congratulations if you're able to hold to Apex Mining until this point. Now going to the global markets, speaking of market breadth, the global markets faring worse than the PH market in terms of market breadth. It's at its lowest since 2005. If we plot that along with the S&P 500, every time that the market breadth indicator hits this support zone here and goes below 25%, we can see a significant drawdown in the markets. Are we going to experience that same drawdown? I think the market is on a critical level here, right? Because if you look at the smart money and dumb money flows into the market, you can see a crossover already here, right? So when the market went up, it was basically smart money dumping all of those stocks, and it was mostly dumb money at the receiving end of it. Now, if we look at the S&P 500 chart, we basically circled back to where we were before, right? 4,133. As expected, the market did make a move towards its extreme zone at 417, right? And settled back down to 413. So if we look at the money flows, regional banks clearly outperforming all sectors, given not so bad earnings results. We have consumer staples, we have finance, we have real estate, we have utilities, we have solar, and we have industrials. So some type of movement going into the defensives coming into this week. Let's look at this chart here. Interesting chart. U.S. bankruptcy filings by month. In March, we have a record number of bankruptcy filings at 71. We last saw this level back in June of 2020 during the pandemic. So as mentioned, 87% of the S&P 500 is going to report their earnings in the next couple of weeks. Only 25% of the S&P 500 is outperforming the index. That's like 120 stocks max. The current rally in the S&P 500 now is primarily driven just by like 1/4 of the stocks in the S&P 500. So most of them are going to report their earnings this coming week. We start with Coca-Cola here, and then we go to the big names: Microsoft, Alphabet, Visa, McDonald's, all reporting on Tuesday. Today we also have General Electric, 3M, and PepsiCo. We also have Meta reporting on Wednesday. We have Amazon, Intel, Eli Lilly. We have MasterCard. So we have our defensives, AB, Merck. Interesting to see Visa and MasterCard report, which would give us a glimpse of how consumer spending played out during the first quarter of this year. So let's look at the implied movement coming into this week. So what this chart means is, depending on the results for these major stocks, Facebook can move 7% either to the upside or to the downside. So we have Amazon also 7%, Intel, very volatile stocks here, so be careful trading them. Some of the less volatile stocks, we have Coke and McDonald's. Google may move 5% to the upside or to the downside depending on how they play it out. We may see their earnings suffer a bit, but given the AI hype, it might balance itself out. Of course, Microsoft also with their own AI play coming into next week's earnings. So that's it for this week. I hope you enjoyed this episode. Please subscribe to the channel, like this video, and as always, good luck with your trades. Manage your risk accordingly, and I'll see you again next week. Bye-bye.